Joann is the current president of the National Association of Retail Collection Attorneys. As Adam said, a group that is responsible for many, many serves and definitely users of process servers throughout that industry. Joann is vice president of Maurice and Needleman, where she is a managing attorney. She has extensive litigation experience in state and federal courts, successfully defending creditors against claims brought under the Fair Debt Collection Practices Act, Fair Credit Reporting Act, and in Pennsylvania under the Fair Credit Extension Uniformity Act. She provides counsel, consultation, and litigation services to financial institutions, law firms, debt buyers throughout the country. Her many speaking engagements have included NARCA and the American Bar Association events, and now ServeCon. Joann will discuss the common pitfalls when it comes to third-party vendor oversight and a number of factors that affect process servers in the debt industry. So the plan is to roughly let you speak for 40 minutes or so, and then about 10 minutes of Q&A. And I will turn it over to you. Very excited to have you, Joann. Thank you for joining us today.
Thank you, Trent, and I'm hoping that everybody can hear me. If there's any issues, Trent, I'm sure you'll get a hold of me and we'll try to figure it out. Okay, great. Well, this is really exciting, and I really want to thank ServeCon for asking me to participate in this very unique event. I think online conferencing, anytime that we can stay within our offices, do the work we need to do, but also engage and participate at this peer-to-peer level is great, and I'm really excited about this, and I'm going to be paying close attention to this conference and see how you guys do, and maybe something to take back to the association and groups that I work with. So thanks again for having me. I'm going to talk today about third-party vendor management. Unfortunately, it is a big hot topic, and we know this because we see and hear about all the bulletins and policies and statements that come from our friends at the CFPB. One thing I'd like to mention, I don't know if it was in my bio or not, but I currently serve on the Consumer Advisory Board of the Consumer Financial Protection Bureau. I believe at this point I'm the only debt collection subject matter expert on the board. I can't tell you why they picked me. I sit in a room with some very, very smart people, but I am learning a lot, and I'm trying to teach them about our industry and some of the issues that we have in our industry. So a lot of what I'm going to talk about today is based on not only what the CFPB has said, but my observations and working with them over the past 8 or 9 months. So, you know, there's no, well, let me go to the next slide. Oops. Hold on one second. Okay, just the quick typical disclosures. What I'm going to be talking about today is not legal advice, and hopefully it's just informational and the standard disclosures which you've all heard before. So we're going to talk about service providers, third-party vendors as they're called, and the CFPB. That's the first area that I want to get into. So in case of some of you are not familiar with the CFPB and what their authority is, they were, oops, sorry about that. They were developed under Dodd-Frank, which is the law was enacted about 3 or 4 years ago. And 2 key areas of the Dodd-Frank bill are the issue and definition of a covered person. So I have the statute there. It is a very, very broad term, and it covers anybody that potentially touches the financial services industry. For this time, attorneys who practice in the debt collection area, and many of you serve and work with those attorneys and law firms, are covered persons under the Dodd-Frank Act. This is certainly a bone of contention for our members here at NARCA, because traditionally attorneys or otherwise the jurisdiction of how attorneys act and their conduct is usually left to the states. But the CFPB, given the broad powers that it has, obviously sees it a little differently. That authority in some way comes from the fact that in addition to touching broad aspects of the financial services industry, the CFPB also is promulgated with developing rules and overseeing various enumerated consumer protection laws. So any consumer protection laws that touch the consumer financial services industry is also under the jurisdiction of the CFPB. And as we all know, the FDCPA, the Fair Debt Collection Practices Act, attorneys can be subject to that act, especially when they're doing pre-litigation activities, as like sending letters and making phone calls. However, NARCA would say that once an attorney signs a pleading or is engaged in litigation and engages folks, process servers like you all, then at that point the states should step in, because that's where the states are regulating our law license. So that's a whole nother webinar for another day, but just understand that attorneys at this point still fall under the Dodd-Frank Act and could be subject to jurisdiction by the CFPB. The next important term is service provider, and that was a key definition in the Dodd-Frank Act, and it means that anyone who may work with a covered person. So this is where process servers could fall into coverage by the CFPB, because you touch and you work with people who are covered persons. Another example would be skip tracers. So anybody that provides a material service to a covered person may be under the subject and jurisdiction of the CFPB, and that's kind of scary because it's very, very broad. So because of this relationship of service providers and being somewhat subject and have oversight by the CFPB, we have to look at that relationship. And the CFPB did that with a bulletin that they issued in 2012. When they issue bulletins, they give the year and they give the number of the bulletin of that particular year. So the third bulletin they issued in 2012 was what was called the Service Provider Bulletin. It was 3 pages long, but chock full of information. And what's interesting about that bulletin is, you know, it's not a rule. It's not a piece of legislation that was otherwise voted upon by Congress and signed by the President. It was just what the CFPB says. And they have, as we called, unbridled powers. And if they want to issue a bulletin, I like to think of them somewhat as policy statements, but they have full force and effect to a lot of things. It allows them to supervise and examine, and those policy, I like to call parameters of these bulletins, or what the CFPB is going to look for when they supervise and examine you. So these are critical bulletins that the entire industry must pay attention to. And it could be very harmful because bulletins change. We don't know what the foundation of these bulletins are, but they come out all the time, and we need to pay very close attention to them. One thing before I get into the meat and potatoes of this particular bulletin as it affects those on the call and who are in the service process server industry is, let me just take a step back a minute and just talk a little legalese a second. And I certainly don't want to go over anybody's head, but I think it's important to understand. So when you talk about the law, there's 2 aspects to the law. There's the statutory law. Those are the laws on the books that a legislature or Congress approved and otherwise were signed by a president or a governor, maybe a mayor. Those are the rules that we open up and say, okay, you can do this, you can't do that. Then there's the common law. The common law is a body of law that's established by the judiciary that's used time and time again and is accepted principle. In common law, there's this idea of agency and independent contractor. So if you're an agent of somebody, and I think an employee is the best example, you're an agent for that company. That company supervises you, has controls over how you do your job, and if you do something in the course of scope of that employment where an employer has direct control over what you do, your employer could be liable. That's called vicarious liability. The other aspect to this portion of the law is called the independent contractor. Now, the independent contractor is hired because they have a particular expertise, and the person who hires them doesn't necessarily control them. I think the best example is, you know, you need a roof. I don't know how to put a roof on, so I go hire a roofer. I hire him to put my roof on, but I don't tell him what materials to use. I don't tell him how to do his job because I don't know. If something happens during the course of someone putting a roof onto my house and somebody gets hurt, it can be argued that it's the roofer's liability, not my liability, because I didn't tell him how to put the roof on the house. I want him obviously to be safe, but I didn't give him the tools or the guidance about how to do it. Well, the CFPB sees that very differently. In the CFPB world, there is no more independent contractors. So whoever you hire, whether they work in your business full-time or part-time, whether you control them or not, you are responsible for them. And that's what this whole service provider issue and vendor management issue is all about. And in your world, I mean, there is no more critical element to what you do than working with attorneys on a day-to-day basis. But clearly, you're not attorneys. You do not work in law firms. Attorneys don't and can't tell you how to serve. They want you to do your job properly and convey the information about service back to the firm. We all believe that due process is an extremely important part of our legal system. But we do not control service providers, nor can we, nor should we. But like any person who is providing service to a covered person, and in this case attorneys, the CFPB is going to make sure that you do in some way control your service providers, and if you don't, the law firm could be potentially liable. And we'll go through some cases on that. So I just wanted to give you that quick background. I apologize for being long-winded. So let me talk about this bulletin that came out, which was very, very specific about what entities and service providers need to do. The CFPB expects supervised banks and non-banks, of which law firms or anybody that's not otherwise lending money is, we have to oversee the business relationship of the service provider. So they're basically saying you've got to have a watchful eye on this relationship. We have to make sure, entities have to make sure that our service providers are otherwise in compliance with federal consumer protection law, potentially state law, and we always have to keep the consumers in mind to make sure that they are not harmed and to protect their interest, which is interesting in a legal system of which we're all part of, because as we all know, our legal system is an adversarial system. So it begs the question, as an attorney who's representing a client, say in this case a creditor, what the CFPB in some ways is asking me to do is watch out for my adversary, which kind of puts the whole adversarial system upside down, in my opinion. Second part of the service provider, again, if people will say this a lot, is, you know, they understand that we have to outsource. We understand that attorneys in this case can't be process servers. That would again mess up the idea of due process, fair due process. But doesn't absolve service provider from otherwise not complying with the federal law or federal consumer protection law. So service providers, so when the CFPB expects that when you engage a vendor or service provider or someone who's providing service to you, that they have to be familiar with the requirements of the products and services being provided, have to make sure that those legal requirements are implemented carefully and effectively, that the service provider has their own internal controls to make sure that all of its employees are complying with the law. And the failure to do so could get the service provider, the entity, in a whole heap of trouble if that business relationship isn't properly maintained. The CFPB supervisory authority, that they have the authority to supervise, make sure that all the covered persons are otherwise complying with federal consumer protection law, means that can come to your business, whether it's the service provider or entity, and do an inspection. That inspection will cover not only compliance with federal law, but what we call UDAPs, which are unfair, deceptive, abusive acts and practices. This comes from the FTC. You have to remember that, the CFPB is only an agency of several years old. I have some cords here, sorry about that. And they take a lot of guidance from the FTC, which has been around for about 50 or 60 years. So the FTC has authority to look at these, what we call UDAPs. So it can look at any situation and say, is this unfair, deceptive, and abusive? It's a very, very broad power. It's very vague. It's very subjective, which makes it very difficult for businesses to understand and learn how to comply. But the CFPB has that same authority. So during those during the supervision of non-banks and their service providers, they can also examine if anything that you do is unfair or deceptive. So that's really critical, and it's very, very hard to understand how to pull all that together to make sure everybody's doing what they're supposed to do. And during the course of that supervision or examination of an entity or a process server, or excuse me, a service provider, if they find that federal law has been violated or there has been an instance of UDAPs, they will seek enforcement authority, and which means they'll file a complaint against you and seek monetary damages or potentially injunctions. So the expectations of the CFPB, again, this is all contained in this 3-page bulletin, is that supervised banks and non-banks have to take steps to ensure that the business relationships do not present unwarranted risk to consumers. Again, the focus is always on the consumers. So it's interesting because, sometimes relationships between non-banks, say, and their service providers may have nothing to do with consumers. But if there's some sort of fallout where consumers could be impacted, you still have to manage the relationship. So again, a lot of expectations and potential difficulties for all parties involved. But in order to do that, the CFPB expects that both the non-bank and the service provider has a process to manage risk, which we called compliance management systems. So a service provider who may never have thought to have any kind of written policies and procedures now has to have them, has to understand, if there are complaints or disputes and how to handle them. Auditing. There's so much now a service provider needs to do, and a business entity has to expect that the service provider will do all of these things as well. The entity has to audit the service provider to make sure that they understand a federal consumer law. They have to review all the service providers' policies and procedures. I mean, this is, something that many people have never considered until now. And, I think it begs the question and goes without saying, it's going to be very expensive and can be very expensive. The flip side is it's an investment that everyone now is mandated to do by the CFPB, but if done right, can really minimize risk on the entity and the service provider's part from potential liability and exposure. Additional expectations of the CFPB. They were very specific in how this management process should work. So your contracts, basically the CFPB is now telling you how to write your contracts with your service providers. And if you didn't have one, you better get a contract and put all your duties and responsibilities in writing. So they have to have clear expectations about compliance and enforcement consequences for violation of federal law and UDAPs. The contract must talk about the service provider's internal control, that the entity will monitor the service provider to make sure that everybody is complying, and that the entity will take prompt action when problems are, or excuse me, that the service provider will take prompt action when problems are identified in the monitoring process. And if the service provider doesn't, the contract has to say that the entity will fire them. Pretty simple. This was, I was at an ABA conference, or excuse me, my partner was at an ABA conference in January, and he sent me the audio tape and the slides, and the director of supervision policy at the CFPB basically said that. She said, if they're not doing what they're supposed to do, that we expect the entity to fire the service provider. So that's a lot of authority for someone who knows nothing about your business. Okay, so that was a supervisory bulletin that came out in 2012, and I can, if you can get it online, I'm happy to send a copy to the ServeCon folks, and you guys should keep that on your wall so you understand what the CFPB's expectations are. We also saw the CFPB was very serious about their expectations. And if you look in the CFPB supervisory highlights, again, all of this is online, and they are transparent in that way. When every quarter they publish a highlights of some of the things that they see during their supervision of covered persons, and they focused a good deal of attention on the service provider relationship in their fall 2012 supervisory highlights. And there was a financial institution that failed to establish a appropriate service provider CMS and failed to effectively manage their service providers. And you've seen that, and I'll give some examples shortly. And because they did that, and the particulars to that was that that particular, I believe it was a bank, was not properly providing the information to their service providers regarding conflicting interest rates. And it created issues regarding truth in lending and violations of truth in lending, and they found that that was a problem, and the entity found to have violated TILA, and I think had to pay a pretty hefty price for that because they were not otherwise managing their service provider. So the trends that we're seeing regarding this service provider relationship are a couple things that I'd like to point out. Hold on one second. So the trend thus far has not been to just hold the service provider themselves liable, but the entity. And again, if you guys as service providers have been in the legal industry for some time, and especially in civil litigation, you want to go for the deep pocket, and the CFPB is no different. So it's a way to kind of rein in the financial institutions who are really in the main crosshairs of the CFPB's jurisdiction, and try to change their conduct, and by doing so, telling them they have to manage their service providers, and failing to do so, they're going to pay the price for that. So we haven't seen per se any service providers been kind of roped into this, and seeing a service provider seeing a violation or any sort of consent order against a service provider alone. At this point, it's just been financial institutions, but I do think that's not something that we should just toss aside. I think you have to be really careful, because remember, they are your clients too, and if they get paying for something that you did, don't think they're going to come back to you for some sort of indemnification. But so far, the CFPB has not had an enforcement action solely against a service provider, but I do believe that will change. So far, we've seen entities held for the conduct of their service providers, the Capital One, Discover, JP Morgan Chase. All three of them are very similar. These were outside vendors who were hired by these banks to market add-on products. Some of them had insurance, some of them had a lot of it was like disability type insurance issues. But again, these were all companies that were not otherwise employees of Capital One. They were separate companies, but because of their conduct, which the CFPB felt harmed consumers, a lot of it had to do with marketing, they held these particular entities liable for violations, and they paid hefty fines. Instances where both the service provider and the entity were liable, U.S. Bank and Dealers Financial Group. Again, this was fairly recent. This had to do with car dealers at subprime auto financing. They felt that there was some UDAPs there. Some consumers were being harmed in the way that financial products were being marketed. First Investors Financial Services Group. Again, that was investment products. American Express and American Express related travel services. That was an interesting one, because American Express, while a covered person, is not a debt collector under the FDCPA, and that particular consent order involved American Express's use by its travel-related services to collect, it may have been travel insurance, I'm not quite sure the particulars, but it had to do with debt collection and recoveries of past due amounts. So this was the first time that you saw the CFPB go after a direct lender and its service provider for debt collection. So that, and we're seeing the CFPB wanting to go after direct lenders, maybe not so much on the under the FDCPA, which I think they have jurisdiction to do, but under potential UDAPs. The ITT educational services, that is a hotly contested case right now. The CFPB has brought enforcement action against ITT, and they're fighting back hard. This is in the student loan space, and again, it's has to do with debt collection. ITT, assigned their defaulted student loan accounts to third parties. CFPB said that they were not being managed properly. You see a lot about the student loan space going on right now, but that case is still going on, so it will be interesting to see how that pans out in regards to the liability of both the service provider and the entity. All right, so I've given you the pretty picture of what's going on here. So let's just talk about what under this new theory of the CFPB, how can process servers be liable, and what are the pitfalls and the dangers that can happen in your space? So, we have some conflicting law here, because under the FDCPA, you're not the FDCPA is not has no jurisdiction over service providers. In fact, you have a complete exemption. But there have been instances where service providers have found to have violated the FDCPA if the conduct is outside service of process. So it can be argued, maybe if you're doing skip tracing work, that's not necessarily service of process. I would argue that it is, but there has been instances where maybe a service provider communicated with a third party looking for a consumer, maybe disclosed debt at that time. So there can be instances where service providers can be pulled into the FDCPA. There's been some cases, some good, some bad, but if there are instances where service providers can be found subject to the FDCPA, the CFPB is going to move right in, because then they have that jurisdiction. There's an interesting case that came out by the Second Circuit just a few weeks ago, Sykes versus Mel Harris, and that is a case where both the process server and Mel Harris are being pulled into an FDCPA class action, and the issue obviously is false affidavits, and it's as I said, it's a class action, and it's been they found that there was a violation. So you're talking about a huge number of potential class participants and issues where service providers have been found to be liable under the FDCPA. There was a case a while back in New York regarding some process servers. Various law firms in New York were being pulled into an AG case. That was highly reported about how these law firms were going to be, subject to violations, and the AG was going to impose significant fines and penalties upon these law firms for doing business with, which I think we all believe was a rogue process server who was filing false affidavits. What was not reported is, at the end of the day, the AG dismissed all the counts against the law firms. That was not reported. There was a former NARCA member, Eric Berman, who was very instrumental in getting that dismissal a few years ago. So again, need to be aware, need to be very careful. Again, the issue of false affidavits could be a potential liability for process servers. Failure to comply with state law. State laws are changing all the time, so process servers have to absolutely know and be up to date on the state law, as does the entity has to make sure that the process server understands the state law. Failure to obtain proper state licensing and bonding, that goes without saying. Communicating with third parties, which I just talked about, and obviously robo-signing of affidavits. So those are some hot issues that process servers need to be aware of, and the entities need to make sure that the process server understands those issues as well. So we talked about in the CFPB's expectations that process servers, entities need to make sure that process servers have what is called a CMS, which is a compliance management system. And up until a couple years ago, I don't think any process server knew what a compliance management system was, or that they believed that they had to have one. So what is a compliance management system? Well, it's to establish compliance responsibilities, how those responsibilities are communicated to the employees of the process server, and that responsibilities for meeting legal requirements and internal policies are incorporated into business process. It reviews operations to ensure responsibilities are carried out and legal requirements are met. And it also ensures that if there is issues in the process, that the company or business can identify those and make corrections where necessary. Not an easy task. We talk about policies and procedures, and that's a large part of a CMS, but a CMS is really the culture of an entity, whether an entity or a service provider, and how your company is going to ensure that you're complying with the law, you're protecting in consumer-facing type of conduct, which this certainly is, you're understanding what your responsibilities are, you're protecting that consumer, even if that consumer is your adversary, that you can identify problems, they're communicated throughout your business, and can correct those problems. Not an easy task. It takes a tremendous amount of thought, and it's an organic document, unfortunately. You'll start with a CMS, and as you move through your business, hopefully you'll identify issues and see the good and the bad and make the necessary changes, and the CFPB certainly expects that you do that. I have a little site at the bottom. Again, this is online. If you go to the CFPB Supervision and Examination Manual, that's their second version from October 2012, it outlines, it gives you modules of what they expect. If a representative from the CFPB were to come into your office tomorrow, they basically give you somewhat of a checklist of what they expect to see from your written policies and procedures and your compliance management systems. But again, don't think that that is just a fail-safe. I mean, if that is just a guide with the broad powers that they have, and as I spoke before regarding UDAPs, if they see something else that they just don't like, they don't necessarily have to justify it. That could be a problem. So again, it's an organic document that requires incredible amount of monitoring. So one of the there are 4 independent control components of a CMS. I talked about them a little bit just now, but again, it's board management and oversight. One of the things that the CFPB requires is that it's not so much you have policies and procedures, but they have to come from the top. And the board has to, your board or whatever type of controlling entity is your company. It could be one person, it could be 2 people, your manager, whatever the case may be. I mean, I understand you're all small business, but the idea is from the top down, everybody understands what the expectations are, what the policies and procedures are, that there is some sort of compliance program. There is something in writing that people in the business understand what the law is and how to comply with it. Response to consumer complaints, I'll talk about that in a minute. I don't know necessarily that it falls within the process server arena, but we'll talk about that. But a standard compliance management system must address consumer complaints, and there must be an audit. So regardless of the fact that you have spent a lot of time on these policies and procedures, the CFPB expects that at least at some point, yearly, monthly, some independent third party is coming in to make sure that your policies and procedures are working right. So you get an outside opinion. The CFPB says that when these four control components work together, that is, as they feel, maybe an opportunity for success. Again, it's very subjective. Again, management oversight is so important. You know, as I said, many of you are small businesses. You may hire 3 or 4 people, so management oversight may not be an issue. But if you're not doing that, you need to. You have to make sure that you oversee your employees and what they're doing. Do you know what's going on in the field? Do you know what your employees are doing on the field, what their training is? What is your culture? What is the expectation of your employees? There has to be someone who's designated in charge of compliance. And that person has to know, everyone in the company has to know that they are the compliance person. And the are enough resources being allocated to the compliance? So for process servers, these are all the things that you have to have in place, because the entity that hires you is going to make sure that you have these things in place, and not even make sure, they're required to make sure that you have all this particular oversight in place. So there's a lot of work that's being done on both sides here that may have never been done before. Just to give you an idea of some compliance programs, and again, I'm trying to give examples because I think for some on the call, you're probably scratching your head saying, oh my God, I've got to now like do this, I'm a 3-person shop, and now I have to have all these written policies and procedures. Yeah, it can be overwhelming, but I think if you look at it in some of the ways that I'm presenting here, I think it could help you simplify what needs to be done. And when I say simplify, I don't want to belittle the responsibilities, but give you a better idea of how to wrap your hands about what your responsibilities may be, and how do I start to engage my company, how do I start to put all this together. So some of the compliance programs should include, again, as I talked about, written policies and procedures. You have to have something in place, and that doesn't mean that you have to have a novel, but there has to be something in writing, whether it's a memo, whether it's a book that everybody keeps on their desk. There has to be something that all the employees can reference if they have a question about a particular issue. Training. You have to train your employees on various policies and procedures of federal consumer law if it touches that. And how often are you going to do that? Is it a yearly training? Is it a monthly training? Again, I don't have the easy answer. It's got to be what's best for your company and what's best to ensure that the entity is convinced that you're otherwise complying with the law. And we've talked about this before, monitoring and corrective action. Ability to identify weaknesses in the training process and in the work process. And if we see those deficiencies, how do we correct them? One of the key issues of any compliance management system is a consumer complaint response. I'm not so sure in your instance, and maybe I'm wrong, how much consumer complaints you get. Now, there's a difference between complaints and consumer complaints and what I'm talking about here. I'm sure as process servers, nobody's happy to see you, and they're complaining that they got served with a complaint. That's not a consumer complaint. What it would be a consumer complaint is, the process server threatened me. The process server pulled out a knife, or some, extraordinary instance. But that's what I'm talking about, consumer complaint. Complaining about the conduct of which you did your business. And that's the only, as I said, I may be wrong, but when I'm thinking about this, where I see that process servers could potentially come under this particular section. But I think what's important is the process servers need to have a good line of communication with their clients. So what I would expect would happen is, you serve a complaint, you send in your affidavit, you're done with the case, you don't hear anything more about it. But the attorney goes to court to try the case, or there's the first appearance of the case, and the consumer or maybe the attorney says, your process server threatened my client, said all these, disclosed the debt, starts talking about a litany of things that the process server did. There has to be that communication between the client and the process server. The client must tell the process server of this. The process server must be aware. Again, if there's trends where, and I would suggest maybe logging these type of complaints, because if you start to see trends in this, where maybe there's a particular process server that's getting the same complaint over and over again, this is what the CFPB expects you to oversee and correct. So ensure that that communication with your clients is there so that these type of complaints can be identified. Okay. Oop, I missed one. Sorry, guys. Let me talk about the audit real quickly. It is part of the 4 control components. I would strongly recommend, and your client's going to strongly recommend, that your company get audited. Again, it could be yearly, it could be, every 6 months, but you will have to get audited. And to ensure that you have policies and procedures in place to ensure that you are complying with federal law, and that the audit, after you have an audit, everyone in the company, especially your management, is aware of the audit results. So it's not so much just to be audited for the sake of being audited. You're audited, and if the audit identifies issues, you have to show that you have recognized what those issues are and that you are taking action to correct them. Okay, oops. My apologies. All right, some additional ideas for oversight. So again, this is so new, and probably not hitting all of what should be done, but these are some of the things that I thought about to talk to you about today. Strongly recommended that your client visit you on site, and it could be announced and unannounced. We see this a lot in my space. I represent a lot of attorneys, collection attorneys, debt buyers, agencies. Their clients, their bank clients, whomever, come to their office regularly, sometimes announced, sometimes not announced. But I would strongly recommend that you work with your entity to make sure that they do come to your office at any given period of time. How about a day in the field? It may be important for this third-party oversight for the entity maybe to work with the processor one day. Do a couple, you know, sit in the car, watch them do the service to make sure that they're doing the service right. The entity and the process server should communicate about updates on innovation in the industry. I know, you know, many years ago when the FTC was starting to really look at debt collection, I would say 2008, 2009, you know, they talked about the egregious cases of sewer service, which we all know are very small. But once that discussion happened, there was tremendous innovation in your field. I know a lot of process servers work with GPS tracking, and so the entity needs to understand what updates do you see in your industry, and how is that helping in the service of process. And you have to communicate that with the entity that has hired you. And I would suggest scheduling consistent conference calls to update on issues that maybe process servers see in the field, issues that the entity may understand and see what's coming down, and communicate, you know, about what the industry is facing. Again, I think it's just not so much that an entity hires you, you go do what you need to do, you serve your process, you send the affidavit, and there's no communication. That's not what the CFPB wants. And it's not what an entity is going to expect from their third-party vendors. So continue that ongoing dialogue. Contracts. You're going to need to review your contracts with clear and defined expectations, certainly ramifications if the expectations are not met, as I said, termination, and issues of indemnification. You're going to have to discuss that with your respective clients. But those contracts will have to be, I would absolutely advise you to relook at those contracts in light of what we talked about today. All right. I hope this has been helpful. I hope I didn't talk too much, throw too much information at you. I am certainly happy to take questions, comments. You let me know.
Joann, that was awesome. Thank you so much. So much great information. So well done. I would definitely take advantage of asking Joann questions if you have any right now. We'll give it a couple minutes. I guess a question that I have maybe to get rolling is, do you have any personal examples of process serving firms that you've worked with or you're familiar with that have put a CMS into place? Is it something that obviously it was a challenge? What's your personal experience with seeing a company put a process like this in place?
I think whether it's a process server or any third-party vendor, it's where do you start? And you know, funny story is about 7 or 8 years ago, I was working for a client, really big client, and I had been pitching them for. Got them, and you know, sometimes you have to be careful what you wish for. And so I got the client, and I was like, uh-oh, now what do I do? How am I going to teach my employees how to service this client? And I wrote a manual, and I think it was one of the first CMSs. This is, I think, in 2006. So I wrote a manual, and you know what? Think of it chronologically. That's the best way to ensure that you're hitting all the topics. what happens when, I would start with, what happens when you get a case? What do you do? You know, the information that the client sends you. What's that process like? And then after you get a case, how do you send it to your employees? How does the rest of the company understand what that case is? How do you delegate that case to your process server? Then the process server gets the case. What do they do when they go out and they serve it? So I think if you look at it chronologically, it really helps you start the process of how do I build this, because as you start to think about it that way, I'm telling you, 20 other issues will start to come up and you're like, oh my god, I have to deal with that. It starts to roll. It's kind of you know, it starts to get bigger and bigger and bigger, but I think it keeps you organized in about how to do this. So that's one word of advice.
Right. We are getting some questions from the audience, so that's great. Definitely keep them coming. What entity would do the internal audit?
It can be several entities. It could be maybe the law firm that I would not the law firm that you serve that you're serving cases for, but maybe a different law firm. It could be an accounting firm. And I'm just thinking in the debt collection space. I mean, there are numerous resources, whether it's Inside ARM, ABA, ACA, NARCA. There are plenty of other vendors who do this type of independent auditing. You're not going to be at a loss for entities that can help you do this, but it has to be someone who has absolutely no ties to either your business or your client's business.
Gotcha. Next question is, the amount of control needed for CFPB compliance seems to conflict with the need to exercise with less control for contractors. How do you reconcile these competing governmental compliance needs?
It's an excellent question. I don't have the easy answer. I don't. I look at it as, at this point, the CFPB pretty much trumps everything, and I think you have to look at it from a CFPB perspective than anything else. I highlighted the conflict that attorneys have in both the direct supervision by the CFPB and also in their relationship with process servers in general. I mean, first of all, for attorneys to have to think of their adversary before their client creates a huge problem. But that's exactly what the CFPB wants you to do. Attorneys can't tell process servers how to serve. That's their job. But the CFPB sees it quite differently. So I don't have it's the conundrum that's going to face our industry and your industry for the next several years until we can really get a handle on what the CFPB's ultimate authority is and where that authority stops. And my apologies, I wish I had a better answer, but I don't.
Next question, and we have a few more if you still have time. Okay.
Yeah.
My impression is that full compliance might cost a small company thousands of dollars a year, along with many hours. Would you agree with this?
Absolutely. Absolutely. You know, it's interesting. The CFPB yesterday came out with, you know, where they want to regulate payday lenders, but they said, oh, we really understand that they're small businesses. They really don't. And I can tell you from my experience on the CAB board, they don't care. NARCA, in its response to the ANPR, did an extensive amount of research and data. And for our law firm members, in the last 3 years alone, the cost of compliance has gone up 300%. And 54% of NARCA members have the employee size is 25 or less. All this regulation by the CFPB and even down at the state level is killing small business. I've always said that ultimately Dodd-Frank was trying to prevent too big to fail, but it's creating too small to succeed. I don't have the easy, again, I wish I had easy answers here, but I don't. It is creating harmful effects on small businesses. I strongly suggest, if you are a small business, to continue your outreach and relationship with your local representatives and continue to tell them about the struggles you're having as a small business to succeed with this type of regulation. And use use your associations. I know there's several process server associations that I've met with. Continue to use the association level work to advocate for your small business needs.
I got a couple questions in regards to subcontractor versus employee, and the gist of it is, has there been consideration, or does the CFPB realize that making subcontractors employees could result in the necessity of process server fees increasing service to service debt?
I'm sure they have considered it, and as I said before, I'm sure they really don't care. It absolutely will increase. It's going to increase the cost of everything. At the end of the day, the irony is that the CFPB was developed to protect consumers. But if you deny access to credit, if you increase the cost of trying to recover debt, at the end of the day, credit is going to be more expensive. And you guys are a perfect example of how that is going to happen, because your costs are going to increase. You're going to pass them on to the attorney. The clients are costs are going to increase, and debt collection, the recovery of debt helps to keep credit low. And again, use your associations and your relationships, your state federal representatives, to remind them of that.
How are you doing on time? You have a couple more, or do we need to let you go?
I have about 3 minutes.
Okay. Let's see here. Let's pick a good one. I'll make it quick. What insurance could a business owner purchase to cover some of these potential issues? Does errors and omissions potentially cover this?
That's a really good question. You need to just talk to your carrier. I'm not 100% sure about that because this is so new. I know that there's policies for fraud, cybersecurity, things like that. NARCA is trying to develop a policy for its law firms that will address potential CFPB supervision and examination. But I would talk with your carrier. New policies are being written all the time, and carriers that work in the financial services industry and all the collateral companies like process servers that touch that are starting to look at that carefully. So I would get with the carrier and your agent, whoever that may be, and discuss those issues with them.
Great. Joann, if the audience has more questions, can we take those and maybe shoot you an email in the next week or so?
You can. There's my email address.
Okay.
Happy to answer questions for you. I'll do my own little pitch. NARCA will be in Nashville in May, and we have a fair amount of process servers that come to our conference. We'd love to see you. A lot of the questions that you're asking are in many of the sessions that we have at NARCA, and we have various webinars and work with process servers all the time. So happy to have you participate in those educational opportunities. And again, I want to thank you so much for allowing me to do this.